Rana Gupta is with us, Senior Portfolio Manager, Manulife Investment Management. Rana, good to have you with us here. Good morning. Thank you for your time. Prashant this side. So what's worrying markets, Rana, in your opinion? FIIs have been very large sellers through the course of May, actually even before that as well. And it looks like it's kind of local here, right? Because globally markets aren't doing all that badly. Actually, a couple of markets in Asia have sort of hit new highs, etc. So just your thoughts first on that one.
Good morning, Prashant, and good morning to our viewers. I think the global construct looks quite good because even the US market is doing well. It looks like China is also coming back a bit. But I think India specific, given the election going on and the results are probably, not probably, results are 3 weeks away. I think for the FIs to make a big commitment, as of today, I think there can be some, they can be just wait out for the election results or maybe even the policy post the results. But apart from that, I think what we have seen in India is the industrials, real estate, PSUs having a big rally, and the valuations were stretched as well. So I think we are seeing a bit of profit taking, as well as I think there is a lot of speculation at this point in time, one can say, but I think also some forward-looking thinking that going forward, there has to be something done to revive consumption, or the revenue expenditure of the government, which has lagged investment expenditures, should claw back somewhat. So to that extent, one can say that some sort of sector rotation is also going on in the market.
Okay. Rana, hi, good morning, and thanks a lot for joining in. So, there's definitely some trepidation ahead of the election results. As you said, there's some sector rotation going on in the market as well. But post-election results, right, taking two scenarios. One, where the incumbent government comes back to power in a dominant way, which is, I guess, the ideal scenario for the market. And the second, where they don't get as many seats as they would have expected. And this is something that the market is fearing. In both these cases, how do you expect the market to shape up post-elections?
Great. I think to answer that question, let's take a step back and look at what have been the hallmark policies of the current government. It has been on the fiscal consolidation and increasing capex. So the capital expenditure has grown much ahead of the revenue expenditure. Should they come back with a thumping majority, we would expect more of the same to continue. And in that case, I think the industrials, real estate, and the PSU stocks which have been correcting, they might even bounce back. But should they come with a lower number, but still from the government, I think the markets will think that markets will of course speculate that how the politicians interpret this policy. But I would say even then, even I don't know how the politicians will interpret the verdict, but even then, I think the capex to GDP is already at a level of 3.4%. It's peakish. I think it's very difficult to move it further from here. Going forward, it has to be taken over by private capex. So that's one. So private capex plays are, I think, something to look at. And second, I think, given, as I was mentioning the beginning of this this call, that the revenue expenditure lagged the capital expenditure by a large margin. I think if the numbers are to be seen, capex has grown probably at mid-teens, whereas the revenue expenditure at single digits. That wide gap for 3 or 4 years, I think, has happened. Going forward, we can look at some mean reversion for both. So that is also something that we are looking at.
No, so and do what there in that sense? I mean, actionable, Rana?
So I think let's say the scenario that I just laid out kind of plays out, irrespective of who comes to power with whatever number of seats. Capex to GDP sort of picks out, and you see revenue expenditure to GDP starts creeping up. That gap somewhat narrows. In that case, one would think that that rural-focused autos, rural-focused lenders, which have been out of favor for quite a while, can start making a comeback.
I see. But I mean, there's, right now, we'll only, of course, all of this is all conjecture, right? We'll only know on the 4th of June when the votes are counted in that sense. This constant FII selling, do you think it is just some rotation because of high valuations, etc.? Whenever China's has been looking a little better, so there's that relative trade as well, which many have spoken about. Do you think it is just that, or is this I mean, should we see these very large sell flows as kind of an indication of real nervousness around these polls? I just wanted to get a sort of quick perspective on the FII selling that we've been seeing, Rana, in your opinion.
Sure. So I think first point is there is no, I think it's difficult for FII to come with large amount of money funding the election. I think more than election, one will also to wait for the policy of the new government in terms of, what they lay out. There is a lot of buzz around 100-day plan and budgets and so on and so forth. At the same time, we have seen some recovery in China. In the earlier shows I have mentioned that China will see some recovery provided they do something about the export and the real estate. It does seem that they have done something of the real estate. In the last Politburo meeting, they spoke about finishing the unsold inventory, which is somewhat of a change from public focus on public housing so far. So as a result, these markets seeing some recovery, and obviously China, because the underperformance had become quite cheap. So I think that's some sort of rotation going on at the moment.
Okay. Rana, fair enough. Thank you for being with us, and hopefully we'll get more clarity on which way the markets head post the elections. For now, there's definitely some jitters in the market.